Joining us now, Wells Fargo chief economist Jay Bryson. Jay, you heard the chair there. Obviously, I believe you listened to his speech. He didn't tip his hand totally, but did leave the door open for more hikes if necessary, although you believe that the tightening has come to an end. Do you still believe that after what you heard from the chair here this morning?
Yeah, Courtney, we still think the tightening has come to an end, but clearly, I think the risk of that is skewed to the upside. I think the bar for a rate hike in September, I still think that's relatively high. I think November is a possibility at this point. But if we continue to see disinflation in the economy, if we continue to see things kind of softening up a bit, our expectation is the FOMC is on hold. But again, I think the risks are skewed to maybe a modest tweak higher at this point.
Jay, if we were moving dots today or updating dots, did you hear enough in there to suggest that the committee would be raising their rate outlook?
No, Carl, I didn't hear enough in that. The committee is still looking for, if you look at the last dot plot that was released back in June, there's still another 25 basis points in there. And so I don't think you would see, a dramatic change in the dot plot. Obviously, the FOMC meeting that's coming up on the 20th, we'll get a new dot plot there. But again, I didn't hear anything that would indicate that they think significant further tightening is needed. I think it's more on the tweak side.
I thought it was interesting when Powell was talking about the recent reads on inflation. He seemed a little reluctant to get too excited about what he had seen there, had some doubt about the recent decline that we had seen. What do you read into those comments?
Yeah, I think that's right. If you, depending on how you slice or dice it, I mean, we have seen this, as the chairman pointed out, we have seen an improvement there. But if you look at the 3-month annualized pace, that's still well above the Fed's target. It's above 3% right now. And so I don't think anybody at the Federal Reserve wants to declare victory at this point. And I think, he's trying to speak for a consensus there. And the consensus, I think, is still leaning a little bit towards maybe the more hawkish side at this point. Again, not just slamming on the brakes at this point, but I don't think anyone on the committee is looking to cut rates here in the near term.
Next week's going to be busy, Jay, between jolts. We'll get some China PMIs, European CPIs, our own PCE, Jobs Friday. I've seen a lot of 170s for Jobs Friday. What do you have in mind?
We're kind of close to that, Carl. We're about 160 at this point. So that would represent another step down in the pace of job growth. It's something that the Fed is looking for. Powell mentioned that in his speech here. A big indicator will also be the average hourly earnings. We're looking for a 0.3% increase month on month there. So we're seeing continued signs of wage deceleration as well. But, the Fed really wants to see some more. And so, yeah, a lot of data coming up. And it'd be interesting to see how all that plays out and how the Fed reacts to that on the 20th.
Chair Powell did make a comment about what's going on in the banking system, saying that tighter bank credit standards are slowing the economy. Do you agree with that?
Yeah, I mean, if you look at the bank loans over the last, let's call it 13 weeks or so, which is a quarter, it's essentially flat. Bank loans have really flattened out. Now there's still issuance going on in the corporate bond markets. That certainly is welcome news. But credit spreads are relatively wide at this point. Absolute levels of rates are high, and so there is some deceleration in terms of credit in the economy.
Jay Bryson, thank you very much for joining us from Wells Fargo on a big day for Chairman Powell.